have a conversation in regards to just how low interest rates are, how you could buy a home with no money down. We're helping a lot of clients right now just be able to buy a house with literally no money down. And we're sitting here with Grace, my wife, that does loans over at a Platinum Home Mortgage, and with Silvano, team member of the Davis team.
Yes.
And we're already having conversations and learning the program, and just wanted to include you.
Well, you definitely came to the source. Platinum Home Mortgage is a direct lender, and it's really important that we get the message out there to people with what's going on in the market today. There's been a ton of changes. You guys that are out there writing offers and meeting with people, you know that the beginning of the year was a lot different from where we are now. What are you guys seeing out there?
What I'm seeing, well, I'm working with a lot of first-time home buyers, and they're looking to buy their first home in the Bay Area, and they're having a difficult time with the down payment.
For sure. That's one of the most asked questions that I get.
Yeah, and they really want to buy a home. They're making good money, and they're just struggling with the down payment, and they have good credit scores, and they just don't know about some programs.
Well, have you guys heard about all of the CalHFA programs? Because we could dive a little bit deeper into all of that today. And, me as a lender, you can kind of lean on me for all of the kind of ins and outs for that. So one of the things that I've been getting, one of the most popular questions is, what's the credit score for the down payment assistance program? Do you guys know?
640.
This is a test. This is a quiz.
640.
Okay.
Minimum. So
yes, that's correct. So 640 is the score that you need for the down payment assistance program, and that's really important because a lot of people. I had a client today, and she was like, "Is 640 a good score?" And I mean, it's not excellent, but CalHFA doesn't really ding you for a 640 score. So let's say somebody walks in and they have a 740 credit score, you would think that they would get a better rate. With the down payment assistance program, they're really flexible and they don't give you that extra hit for interest rate. So that's one of the benefits of the CalHFA program.
One thing too is that a lot of people assume that you can't actually qualify, and you just think your credit's not good enough, and then they don't even try. So like I'm hearing a lot of people, I'm getting calls, and they're just like, I don't even know where to start. I don't even think I could qualify. And I'm like, well, where are you at? What's your credit score? Let's get you to where you need to be. And 640 is all you need, and you actually don't need any money. So
okay, so the second piece to that, whenever you're gonna buy a house, the formula to buy a house is very simple. So let's say that you make $100,000 a year, so you're making around $8,000 a month. No more than half of that can go towards a mortgage payment. So if you're making $8,000 a month, then you need to be at a mortgage payment of no more than $4,000. So you really don't want to exceed, 45 to 50% of your income.
And how much is a $4,000 payment? So how much house can you get?
So, that leads us into something else. So easily that's a $600,000 house, just so you guys know.
So you could buy a $600,000 house and have a $4,000 payment and buy it with no money down.
Wow, that sounds really good.
But here's the kicker. Were you guys writing offers like a month or two ago, and then you'd send them to me or send them to the lender, and then they'd get the payments and kind of freak out?
Little bit, yeah. They just don't know what's going to happen because they're like, I paid rent and I was like $3,000, and now I'm paying $4,000, but I'm owning the property. I'm getting kind of worried. That's what I deal with some of my buyers.
So it sounds like you've been educating your buyers so that they can understand the benefits of owning versus renting, because yes, they are going to pay more sometimes by owning the property, but part of the kind of culprit for that was that interest rates were higher. So interest rates have been dipping, and from, let's say, February to now, we're almost I want to say 1% lower than where we were. And so that means that if I quoted you a payment of around $4,200 on a $600,000 house, that payment is now about $200 cheaper.
Wow. That's going to help my buyers out.
And, for some people, that $4,000 payment might be too high for you. And so the thing is, you could buy, just because you find out what your maximum payment is and what you could qualify for doesn't mean that's what you're going to want to spend. So that's why talking to the lender and kind of finding out exactly where you're at and knowing what your budget is. So maybe your budget is not more than $3,000 a month. At least you qualify for a little more, and at least we're really easily qualified at that $3,000 monthly payment. how much can that $3,000 monthly payment get you as far as a house?
Well, if you're in the $3,000 monthly payment, then you're looking in the fives. So, again, those numbers look a lot better than they used to for us. I've been pleasantly surprised. I mean, I'm looking at the interest rates every day, and every day I'm quoting my clients a little less, which is nice. I mean, for the $500,000 loan amounts, I don't know if you guys are aware of the differences between what's called a regular FHA loan and a high balance FHA loan. When you go to that higher price point, a lot of things are more important. So credit is more sensitive, down payment is more sensitive, because they're letting you borrow a lot more money. So from the banking perspective, it's riskier for us to let you borrow more than $500,000. So we're gonna double check everything. We're gonna make sure the income is solid. We're gonna make sure the credit is stronger, because we're letting you borrow more. And so what that means as a consumer to you guys is always ask, what can I do to improve my chances? What can I do to improve my rate? Can I improve my credit score? All of that stuff is gonna be a direct benefit to you guys. And if you're buying a house from, let's say, $510,000 and down, your interest rate is a lot lower without some of those extras if the credit's not pristine and little things like that.
And one question I always get is later down the road, let's say they bought their first home and they're happy with it, but they want to lower their monthly payments on the house. Could they do that?
Yeah, so that leads us into a refinance. A lot of people are asking me, what's the benefit of a refinance? Do I even need to do it? And the answer was no in certain instances, because there needs to be a benefit when you're going to be doing a refinance. So that could be cashing out, that could be removing the mortgage insurance. There's a lot of factors that play into that, but the biggest factor was that rates were a little bit too high. So if the rate wasn't going to drop, your payment wasn't going to drop lower, a lot of people are walking into the office that maybe didn't have a benefit in doing a refinance, but now they do, because we're dropping their interest rate. We're either cashing out to pay off a couple of accounts, or they can even reduce the number of years on their loan.
That will help out a lot.
Yeah, and so I think what you need to do if you're looking to buy a home and you're kind of on the fence about even purchasing, one of the most frequently question that I get is right now a good time to buy? And a lot of people, what I'm telling them is look, there's still a lot of homes that are actually affordable still, to where, let's say you're paying $2,500, $3,000 a month in payments on a rental, you could buy a house and still have the same amount of payment, right? So the thing is that still makes sense to purchase, because the thing is a lot of people are waiting and let's see the market crash. The thing is if you're buying below 500, 600,000, and your payments around, let's say $25,000, $3,000 a month, even at $3,500 a month, that's still gonna get you a rental somewhere, but you could own a home almost in the same neighborhood for the same monthly payment. So you might as well own that home and lock in that payment and have that low interest rate. Because the thing is, rents never go down. The markets crash. I mean, the prices of the homes are gonna go down, but literally you need
somewhere to live.
Yeah, you need somewhere to live. You're always gonna have to pay that payment. So that's where I see it still making sense at certain price ranges. You might not get that dream home, but this is gonna help you get that dream home faster and taking that stepping stone approach.
So my thoughts on whether it's a good time to buy, and we'll all answer that, is, it really depends on where you were a couple months in the market. What my clients are seeing, I've been doing this for a long time, so we've seen the market crashes, we've seen that real estate is cyclical, and there are some moments that the market goes down and it also can come back up. So looking back at 2006, we're not in the same market, not even close, because what happened in 2006 was people were not purchasing with fixed mortgages. They weren't paying principal and interest. They weren't in the same financial position that they're in now. And that's huge, because if you remember making less in 2006, 2010, for my young people, they were still in school, that didn't really even have an effect on them. But now that people are established, they're seeing career rate increases on their job, they're making a lot more, so their financial position is stronger. People were making, let's say, $50,000 a year. Now they're making closer to $70,000 a year. So it's a stronger financial position, and that creates a little bit of a safety net for real estate to remain healthy. Secondly, we also have fixed mortgages that require income and asset verifications to qualify. principal and interest payments, which means it includes everything. You're not going to have any crazy surprises. And that, guys, is going to keep the market healthy. And that's why I feel like it's still a good time to buy, because that, compared to where we were before, is going to create for a long-term stability in our market.
It's still a good time to buy. Just don't over leverage. Don't get that high payment, and you got to be ready for the worst case scenario. You don't make that much money anymore, and just be prepared. But it goes back into, you're going to have to pay rent somewhere anyways. Like, you might as well just continue paying your own. And yeah, but the thing is, like, what we wanted to kind of let everybody know is you're able to buy a house with literally no money down. There are options available. A lot of people call me and they weren't even told about no money down programs. And then they're offered all these FHA first-time homebuyer programs, and then they find out they have to come in with $30,000, $40,000 when you could actually buy a house for a lot less because of all these government programs that are out there. Now that the interest rates are matching up with those regular FHA or conventional loans, it's like almost like a no-brainer. Like, why not? It's almost like free money, because if you do sell it or if you refinance, you do got to pay that back, but you don't have to come out of pocket, which a lot of people don't even have yet.
So going back into that, with the down payment assistance program, we're going to cover the entire down payment. So I tell people, maybe take care of your credit cards, bring down the balances so that you're in a good space, to carry the mortgage. So it's going to free up a lot more of your money. You can also use some of that savings that you were going to use towards the house, towards repairs, so you can get into a better deal. And then I have a test question for you.
Okay.
So when you graduate from college, do you think that you need to wait 2 years in order to purchase a house?
Me personally, no.
Okay, good. And the reason?
Because there's so many programs out there that allow me to purchase a home and have the same monthly mortgage payment as I am renting. So why not build up some equity for myself and not pay someone else's, rent?
So I'll give you the lender answer to that. So the lending answer to that is, when you graduate from college, you don't need a 2-year employment history, because we count your college education as your 2-year employment history. So if you just graduated and you became a psychologist, and I'm sure you have some student loans and stuff like that, but you are able to qualify that second month that you graduate from college. And the reason is we're going to use your diploma and we're going to use your transcript, and that's going to supersede the 2-year employment history.
Wow, that's going to help a lot of my buyers.
No, that's huge.
That's going to
Yeah. So I think, we could wrap it up, and, we don't want to take too much of your time. So the thing is you're able to, check into your options. Don't assume that you can't buy a house right now. The thing is, maybe you can't buy a house right now, but at least Grace will be able to let you know exactly what you need to do to qualify. Maybe you're a year out, maybe you're 2 years out. But if you don't know, you don't know. But she'll be able to let you know, give you the right path, what to go down, fix your credit, do this, do that. And don't let cash be the issue, because like I said, there's no money down programs that you may qualify for. So let's find out and see if we could let you become a homeowner. That's the goal.
And just to recap, I just want to let you guys know that if you pre-approved yourself a couple months back, it may just be that you have an entirely different option available to you with much lower payments, more competitive interest rates, because the market has dipped as far as interest rates. They are almost 1% lower, and that makes a really big difference on your mortgage payment.
Yeah.
So all my first-time home buyers out there, the first thing that you need to do is call Grace, and she will give you the loan to buy your first home.
Yeah, so for more info, I would suggest send us a message with your name and your number and your email, and Grace will reach out to you right away to get things started. And just be sure to like and follow all our pages. I'll tag everybody below to stay up to date on all the newest trends and newest programs and best tips to succeed in this market.
All right, thanks guys.